What's good, ladies and gentlemen? So in tonight's video, I'm going to be breaking Bitcoin down on the next levels that we may see Bitcoin go and take, but I will be talking about why the S&P is on its way to testing what could be the start of the pressure that the Fed has put on the financial markets. If you are new to the channel, mad love and respect for passing through. Let's have a conversation. According to economist Mr. Peter St. Ange, he's suggesting that we might actually have a repeat of the financial crisis back in 2007, 2008. You see, back then, up until the 2008 crisis, there were around 25 banks that had collapsed. Then the 4 years that succeeded the 2008 crash, 440 banks had collapsed. That's nearly 100 banks a year. And he's suggesting that we're probably going into the same story. So let's try and wind that all up and see, can we verify that? Check this out. The banking sector itself is struggling, and we know this. We've got bank collapses all over the place. You may have heard about PacWest. Their stock plunged only a day after Jerome Powell had suggested that the banking sector was all good. They haven't got any liquidity issues. But you can see the stock is plunging. That's because investors are in fear. So where's the money going? Check this out. There's a record $5.3 trillion worth of cash on the sidelines as investors are more bearish on stocks. Now, you know what they say. Buy the rumor, sell the news kind of story. Well, let's just try and back that up a little bit more. Where's this money going? Well, it looks like the money's actually being held in cash, or money index funds for the better word. You already know that people are actually withdrawing money from banks because of the fear of what's happening with banks across the board. But $5.3 trillion is sitting, waiting to be used. Now, let me show you something. This chart right in front of us is the smart money, dumb money confidence chart. And you can see at the lowest point right here of the S&P, the smart money confidence chart was pointing upwards. Now, what does that mean to you? Well, when prices are dropping, what do you think smart money's doing? It's buying. But when prices are rising, which is this dark line right here, which is the representation of the S&P, when it's going up, smart money is selling. So now where are we? We've had this laggard movement with the S&P, and I'm going to show you where we are in the S&P, which is going to pose a bit of a problem for us and for Bitcoin if Bitcoin doesn't buckle up its boots and starts behaving the way it should have been behaving from the day it was actually made. If this blue line continues to move up, then we're of the impression that smart money is buying up as everything is dropping. You see, smart money can be irrational. It's smart money. They do things the opposite. Retail today has experienced a pain, and Bitcoin's dropped, crypto overall has dropped, but the S&P, the NASDAQ, and stocks have fared okay, but that's only because we've got the key core inflation data coming out this week, which I'll be talking about in a split second. And there's a lot of anticipation on where we are in terms of inflation. So we know that smart money right now is in essence buying up. Check this out. Right now in the S&P, this chart right here is suggesting that if we continue at the rate that we're going at and the S&P continues to pull back, then we'll be coming into the 2020 level, which was where the COVID crisis was. Now, if it breaks this region right here, we're going to be coming down, according to sources, because it's the banking sector that's leading the way. And as he said quite clearly up here, ladies and gentlemen, you can't have a bull market if the bank stocks are falling, because they are the reason why the economy will move. Let's just take Joe. Joe is a small business. Now, Joe wants to expand his business. How's he going to do that? He needs to invest more money in the business. Where's he going to go? He's going to go to the bank. The bank's going to get that money. They're going to give it to Joe. They're going to charge an interest rate. Joe's then going to improve his business. He's going to get more people to use his business. That money that he gets from that business is only going to go back into his business, and it's going to circulate over and over again. The bank is happy. Joe is happy. Okay? And people that are doing the same thing are naturally going to experience the same cycle. But if banks ain't in a position to be lending, and given that the interest rates are so high, with the prospect of them increasing the interest rates even more, money is going to get tighter and tighter to obtain. That is how, in essence, you are going to be leading us into stagflation, which means unemployment rate up, economic growth down, Inflation up. That's the problem. And that's what the word on the street is suggesting. So now let's just take this information, roll over to the charts to make sense of where the S&P could end up. And the reason why I'm talking about S&P is because Bitcoin has around a 73% correlation to the S&P 500. Check this out. This is our zone that we're talking about. This blue dotted line right here, the 3,400 zone, okay? If the S&P makes its way towards this region, ladies and gentlemen, then we're going to have ourselves a little bit of a problem. Purely by the principle of the hybrid system, we can see that we've got a vector candle region smack bang right there at the 3,407 zone. Now, if the S&P continues to break from this region here, then we're going to be going down into testing this vector candle in the shorter term, which is at 3,787. What could encourage that? Going into this week, guys, we have on Wednesday the core price index or key inflation data that is being released. They are projecting it to be 5% again, and it's still not in line with the Federal Reserve's target of 2%. Even big analysts across the board, hedge fund managers, are even suggesting that there's no way they're going to achieve 2% unless they just aggressively keep increasing interest rates. That's the goal by Jerome Powell. He wants 2%, and they're most likely going to get 2%. Then we have this story about the US debt ceiling, which I'll be talking about in another video. So now we know that this week is going to be filled with a lot of news announcements that could encourage investors to say, you know what? I don't like the way things are going. If the inflation data comes in at 5% or more, we're going to have a problem. If it comes in at 5%, then we'll understand that inflation may have paused. But the strong labor market is causing the issue. Last week, we had non-farm payrolls come in and smash analysts with more people getting access to work. That means more people are going to spend money. That means more inflation is on its way, according to sources. Let's get into Bitcoin price action. Check this out. On the one-day time frame, Bitcoin has broken the critical zone. There it is right there, ladies and gentlemen. That key area, 27,648, okay? Naturally, it changes, but it's at the 800 EMA where Bitcoin has broken this zone. Very important. Why? Because Bitcoin, if it continues with this narrative, they're going to see the return to vectors. And that's this area right here, 22,900, and then, of course, 21,183. What would you need to see happening on the daily time frame? They would need to stay within and below the 50 EMA cloud. That simple. This is all we have. We don't know what the markets are going to do next, but the general sentiment across the board is saying that things ain't looking too good. Now, this isn't FUD. This is getting you to understand whether price goes up or down. How can we maximize or profit from this? For my day traders, you're going to be going down into the 4-hour time frame and looking at how aggressive Bitcoin is behaving. And you know that the lower band of the 50 EMA cloud on the daily time frame is within this area. The more they move away from this zone, there is more of a chance that Bitcoin is going to start breaking even lower and probably coming down to its average weekly range, which sits at the 25,552 zone. How do we justify this region? If Asia gets onto wind of what's gone on today in the marketplace, then there is a good chance Bitcoin could actually eat some of the liquidity at 26,900. We zoom out and we have a look at where we are on the 7-day chart, and we can see that that liquidity around the 30K zone ain't so great anymore. So what was nearly $4.9 billion worth of short liquidations is now $3.8 billion. So they've taken money off. In other words, there's more commitment down below, and they've eaten that liquidity already. We go into a higher chart, we look at the monthly time frame, and you can see what they're going for. There is a stack of liquidity at 26,400. Go to the chart. 26,400 takes us towards this region right here, ladies and gentlemen. There or thereabouts. We take that zone. Look left. Is there a vector candle? Of course there is. There's a vector candle region right there. Okay, we go into even a lower time frame to dissect where this candlestick sits. Okay, look closely. It's in a last area of what would be deemed as an area of support where price had bounced from. Zoom out and just look at the area that price with the high liquidation zones at 26,400. Just look at the area that it's in. You have got the following zone. 1. You've got the second zone. Well, it's third. Yeah, we'll go with that one. 2, 3, then 4. Okay? Bitcoin is on its way towards this if it picks up momentum, which is another vector candle at the 27,181 region. It's only the last point of interest in the chart. Could this be setting up for the CPI? Could we see a lower reading in inflation? Because if that's going to be the case, then Bitcoin is being set up to move back up again. You would need to see Bitcoin hold out within this zone right here because it's broken the daily 800 EMA that we've been monitoring for quite some time. And if it does continue with this narrative to move lower, Bitcoin is going to be coming back up into, well, back down in towards the previous pools of liquidity right here. That's where we are for Bitcoin. Wait until the CPI data comes out if you are going to decide to take trades. From now until then, the market might stabilize where it is. If the market continues to drop down even more, then I would be more inclined to believe that the inflation data might give investors a little bit of an optimistic move, and we'll see a bit of a recovery back up into the ranges and get back closer towards that 30K zone in Bitcoin. But if we don't see that in the data, then we're going to have ourselves a bit of a problem. The faster that they are moving, the more inclined I am to believe that it could be a fake move. But if the banking crisis continues and the idea overall that inflation, if the data comes out and says that we do have a problem with inflation still, they're getting their money's worth and they're trying to get out of their positions. And the only way they can get out of those positions is if smart money buys it all up. Ladies and gentlemen, if you've made it this far, mad love and respect. If you are new to the channel, make sure you subscribe because we'll be going live tomorrow to bring in that New York Fire live stream. Take care of yourselves, gang. Mad love. Peace.